Hi, welcome back to another episode of Hoot and Poop. So in today's episode is a little bit more ad hoc, more special. I try my best to rush it out as soon as possible. So basically, please pardon, my lack of preparation for today's video. So the reason why I wanted to do this is because my first company that I shared on my channel is called iFast Corporation Limited. Right, it's listed in Singapore. So basically, this is mainly for the Singapore shareholders. So on 23rd of October, which is 2 days ago, they released so-called their results, okay? Their third quarter results. So I just wanted to do a coverage on what's this whole thing about and give my views on it. So I'm just going to run straight through what I wanted to highlight to you. Okay, so usually when I look at all these quarterly results, right, after you understand the business, what's the business is doing, okay, the next thing is more of like to track what's the management or rather track how the company is performing. So iFast, as we all know, it's basically operates in 5 different markets. Okay, it's a fintech company, basically deals with investments, unit trusts, shares, etc. A quick summary. Okay, the main bulk of the business is basically unit trusts. Okay, that's part of it, and their target to reach 100, the target to reach this part here, okay, 100 billion AUA, which is by 2028. Okay, now as of now, okay, as of the third quarter, their AU has increased again, all right, to 18.38 billion. Okay, so just take note, all right, this AUA increased. Okay, it's not really a one linear curve. It can go up and explosive. It may not move at all. So it really depends on how many assets that comes under them. Okay, so that's the AUA portion that I wanted to cover with you. Other than that, what do I look at? I look at, if the revenues are growing, if the profits are growing, which later we can see on the whole chart. But take note, this time around presentation, right? One interesting thing is that they actually talk about, or rather they gave a projection up to 2024 to 2025 regarding their Hong Kong's business sector, which we will take a look. Okay, so looking at this, you can see that the net flow, the net inflow and the gross unit trust subscription has gone up, but that's spotted. Generally, nothing much here. But what I want to talk about is the financials, because we need to track that. Okay, so if I look at the financials based on year comparison, they have went up by 23% year on year. Okay, net revenue, it's about 32%. So generally speaking, if I look at net revenue per se, going up 30% on year basis, I'm pretty quite okay with it. I'm not sure about you, but to me, I don't think that's bad. 30%, I think is quite awesome. Of course, if you compare with those high explosive growth in the US, of course, it's another different scale. But if you talk about Singapore context, I think it's okay. So generally, there's nothing much. Profit goes up on about 20+% on average, so I think it's fine. Okay, this is 9 months, and that's 3 months, but that doesn't really matter much. So yeah, overall revenue, you can see that generally it's on the uptrend. You can see. Now take note, this is only a 9th month, but this is the full year. So if you think about it, you just left with one last quarter. It's quite easy to exceed 2020's revenue. Same goes for the net revenue. So I'm pretty sure in terms of financial wise, they will do not too bad. Now, PBT, it's profit before tax. So PBT margin, okay. Basically it's okay, it's quite high, 30+%. It's pretty good to me. Return on equity, that's about it, nothing much. I don't really like to. Okay, the reason why I'm not zooming in all this is because all these are just, once you look at it, you can take a look. You don't really need much of my analytical inputs on this point here. So in terms of the cash flow, I always want companies with, how do I put it? With companies with a comfortable cash flow from operations. Okay, so because that's where the money is, right? So if I see an increasing trend and if there's no debt and so on, then that's a very, very good, healthy sign to me. Okay, so if I look at it, yep, I'm pretty sure it will exceed 41 million based on 2020. If you look at it this way. CapEx, they're increasing, it's normal because they're still growing, so that's about it. Yeah, so that's generally the financial portion. Now, to look at, to see whether, if the company is in a good financial position, look at the cash and the debt. So if I look at it, the cash at bank and in hand, iFast still have pretty good cash. Okay, they also have some money market funds. Okay, it's not too bad. Yeah, but if you look at, then after we look at their debts itself, yeah, it's pretty much to say that they do not have much debt, except they do have some lease liability, which is like kind of like a rental kind of concept. Yeah, so this is the long-term lease and this is the short-term lease. This is what I can gather. Okay, so that's about it, David. Okay, so now this is the most important part of my whole sharing, which is their iFast 5 years plan. So this is the first time they are releasing it, so it's a good platform for us to track. Okay, the fact that the company put this out, it means to say they don't openly say that, but based on my opinion, it's more like they have the confidence to hit it somehow or other. Okay, so they say that this is still consistent. Hitting 100 billion by 2028 is still consistent, right? The growth in Hong Kong, all this is facts, known facts, right? They already told us. In fact, we already inferred for quite a while. But what I wanted to show you guys is this part here. They actually, projected a gross revenue, okay, of about 251 million Hong Kong dollars. Sorry, they had gross profit. Oops, sorry, I think I get this part wrong. Yeah, here, this is the guidance, correct? So, in terms of their target to reach the gross revenue, okay, for 2024 is 1 billion Hong Kong dollars or 1.5 billion in 2025. Net revenue target is about 800 million in 2024 and 1.2 billion in 2025. Of course, then we have the profit before tax margin. Okay, so it's based on its net revenue, it's about, on average, let's put it this way, about 30% by 2025. So what's the point of knowing this, margin here and so on? The reason is that because by knowing the margin based on the net revenue, we can roughly calculate, what's the profit before tax, roughly based on that. And based on all this, we can then do up our own valuations table. Okay. Now, usually this is how I look at guidance. Of course, if you just look at guidance by itself, it's just numbers, it doesn't really tell much. But usually I use guidance to put back into my valuation table and to see whether does it make sense to me. Okay. More license, nothing really much to talk about. Yeah, so basically that's what it is. Yeah. So that's pretty much today's short coverage on iFast. Now, but basically, I actually did a I actually did a evaluation based on their target. Okay, and my valuation works out to within the range of about the fair value is about $12 to $14. Okay, based on my fair value. So the government share price, I think, is still under 10. So do you think it's a good investment? I'm not sure. It's up to you. It's up to your risk profile. So yeah, let me know if this coverage is a little bit too short and so on, because I just wanted to quickly roll out this video for you guys today. Okay, so the rest of it I can leave it to you to read because nothing much changes. What's more important is more of the Hong Kong guidance that they have issued. All right. So with that, I hope this gives you a very, very quick update on it, and I hope you enjoyed this video. To like and subscribe and comment to see whether if there's anything you want me to cover. Okay. So with that, I'll see you in my next video. Invest safe.